My name is Mark. We're here with another edition of Chart the Markets with our good friends from FEG Token and SmartDefi.com. And of course, with the support of our crypto exchange partner, BYDFi.com, BitFi.com. And for if you're looking for the code to BitFi.com, it is simply capital K, 5, capital Z, 4, capital T, lowercase p. And today we're going to try and cover off as many tickers as we can. And obviously we're going to start with the granddaddy of them all, which is Bitcoin. And we're going to review this kind of on a medium, semi-medium, longish term outlook. We're not going to get too far into the weeds on the short time frames, but we want a general idea of where we think price is going directionally. And one of the things that we talk about are levels, right? Current price revisits past. It goes to where buyers and sellers have shaken hands before, and it's just drawn to those areas. And when we drop these lines on our chart, these horizontal lines, is all we were doing early on was trying to establish what these levels might be, so that in the future it helps us make decisions when it comes to the trading that we're doing at that time. And as you can see, when Bitcoin fell, it was looking for a place where it's been before. What did it find? It found, in this case, the upper value range. And the upper value range is an element within the volume profile. If you don't use a volume profile, it's a very simple tool to use. It's going to show you where the volume has and has not been. And it can be advantageous to trade in and out of the areas where it hasn't been, like these, because price can move up or down quick when it gets in there. The most concentrated area of volume is going to be where you see this blue, right? And what was happening is that on this pullback, price was drawn to a place where it's been before, and it found this upper value range level. This is kind of a premium, let's just say. And you can see it's been here before. When it starts to show you that it wants to turn around, again, we're looking at a daily chart. Right? So for some, this is going to feel like watching paint dry, I get it, but we're looking for the daily chart here. And where, once it found its support level, again, that area that it's been before, it's not pin the tail on the donkey, right? It's get you in an appropriate area of support and resistance. And that's what this actually kind of represents. Found the support it needed and it bounced. And where did it bounce to? Where it's been before. And that's why adding these horizontal levels, for lack of a better term, is helpful in the future. And we talked about this weeks and months ago when we first started dropping them on, is that there will come a time when we're going to be glad they're there, because they'll be very relevant. Because what we did is we connected areas of support and resistance from their infancy. And we're basically proving over time how relevant those levels actually are when price moves, both up and down. So price caught some support at an area that it would be drawn to, place it's been in the past. And where did it go? It went to a place that it's been in the past. And on its pullback here, so now when we see this, because let's take a look at what we would be looking at on a daily chart. The white line is the 5 EMA. The yellow line is the T line, which is the 8 EMA. And yes, the 5 EMA changes colors because it's part of our script package, and it also gives us entries long and entries short. Now, what we saw up here after a nice extended leg higher is a doji candle at an area of support and resistance, a demonstrated area that it has struggled with and found support from the past. And then all of a sudden our 5 EMA, because if it's programmed, it's basically sensing a fade in the dollars and the sell pressure coming in, and it's going red, and it's telling us, hey, something's going on. This is our safe entry. Could we have entered up here? Yeah, sure. Right? This gives us the ability to maybe cheat a little bit or make a calculated risk. But this area of 117.3 roughly, when price stumbled and started to fade up here, it's very relevant because it's visually there for us to see, hey, maybe we're going to retrace a bit before we take another run at it. And that's where we are now, part of that retrace. Where did it go on the way down? Well, this level that we dropped in here, it went to where it's been in the past. Spent the better part of 3 or 4 days at this level. It's done it here, it's done it here, it's done it here, way back here, and obviously way back here. And if it doesn't hold that level, which doesn't look like it will, where will it likely look next? That same upper value range. This thin blue line. And why do we feel confident that that's likely to happen? Well, the divergence between the T line and the 5 EMA tells you everything. That's momentum down. And it takes a lot to change these trends down. And the greater the divergence between the two, the greater and more intense that momentum. And of course, the same applies on the way up. But nothing goes up and down forever, right? That's why we do this, because that's what traders take advantage of. Price moving up and price moving down. Our job is just to monetize the chart. But you can see here, there's our premium sell area. And of course, our indicator tells us that, hey, we're fading. This works on all time frames, by the way. And then boom, the divergence opens up and price starts to test the T line and the 5 EMA, but it's unsuccessful and keeps the trend intact. So what's price looking for? Well, if this is a failed breakout, technically we're kind of going to look for the previous wave's low, which I guess brings us back down here, right? Failed breakout, arc up, come back down, and the draw is, again, the upper value range at a minimum, right? If you fail it, what happens? You fall into a little bit of a gap here, which makes it difficult for price to get supported, and it will look for a place it's been in the past, and it's this shelf in here that it kind of creates, which is based on what? Past price. And if you fail that level, well, hello, bigger gaps. And then down here is the point of control. What's a little unnerving about this on the daily chart is that we demonstrate on all time frames on all assets how price is attracted to the point of control. And the point of control is sitting roughly 83.6, actually 83.7. That's a huge dip from where we are. So will time and price come together and maybe it meets somewhere else? Yeah, sure. But it's unnerving to see that down there, knowing how price behaves. But if we just throw on the 20, the 50, and the 200, just for a quick measure, there's the failure of the 20 and the 50. Right now, there's a message in all of this stuff. When you don't get support where it's anticipated, and in this case, you have two major moving averages, which should help support you, and your daily candle splits it like it wasn't there and then produces a sell signal at the same time. I don't like that. Right? That smells like a stocking full of coal to me if you're long. So plus it's happening in this part of the volume gap or volume profile where the volume's already light. So there's more of an opportunity for it to fall down. And of course, here's the 200, which lines up with, by the time price and time come together, somewhere back down here where price has been before. We've broken not just one level, but two levels. So what are we looking for? The next level, 200 MA. And just because the 200 MA or whatever you're looking at as a target seems unreasonable, it doesn't mean that it is. Like, why is it so unreasonable that price comes back to tag the 200 MA? It's not. It just feels like a long way away. That's all. But technically, it's not unreasonable whatsoever. So, if this breakdown continues, that divergence stays intact, we're looking for the next level down. First area of where you might want to catch a little bit of support is the upper value range. Don't hold that, and you start sinking down looking for the next level somewhere in this neighborhood in here. On the upside, if you do get some support, you would hope to take out the previous wave's high. But what you should note here is that you're making a lower high at the moment. So let's see what happens. We don't know if this is just part of a bigger thing or not. On the weekly chart, this is why we do fractal analysis. We've tested the 20 and we've tested the 50. So it's not like we're tagging these things for the first time, because the first time those probabilities of bouncing or finding resistance are stronger. But we've touched them several times. So at some point we're going to break down a touch. Right? We're going to get weak enough that maybe we don't hold the 20 this time. That's what this is here. We've produced a sell signal on this weekly candle. Still, we have 3.5 days to go, I get it. But what you have to see here, are we going to break and not hold the 20 this time? And if we don't hold the 20, what do we look for? We look for the 50. And that's sitting around 98, certainly under 100. So does that put that number in play? Yeah, it does. It's not a certainty, but it's a level that we should pay attention to. The 50-day moving average is key for me on any time frame. In some respects more so than the 200, but the reason it's blue is because it acts like ice. You get support from the ice, and you live to play another day. You fall through the ice, and it becomes problematic. And it really hasn't done that often, has it? In the grand scheme of things. So it's been a while since that's taken place. And all along you've made on this weekly higher highs and higher lows. But you can see how the momentum is starting to wane at the top here. So maybe we do take a little bit of a break and come back and at least test the area of the 50. So there's kind of your medium and longish look at Bitcoin. Now the next favorite usual suspect is XRP, because this, like, if you spend any time on TikTok, I'm sure your feed is filled with people that have told you that by the end of the year XRP is going to be $10,000. Never mind 100, it went right to 10,000. I guess it could, but I'm not taking that bet. And this is the daily chart of XRP that we've been playing with. Let's just take off the 20 and the 50 and the 200. This is a trend line that we drew a while back. It's interesting that the wick of this candle came back and actually tagged that level. And it's almost like that you're going to come back and see this wick again, right? Because what changed on these big erratic candles in here? Nothing. That's just a massive red candle in a downtrend. This is just a huge or green candle in a downtrend. And what did this candle do? Other than flush a few people out, stop them out, whatever. Didn't do anything to change the trend, because our system is telling us that the trend was still down for XRP. The divergence never broke between the T line and the 5 EMA, telling me, especially look at where it closed, right? It closed right at the T line. And I bet you, let's throw on the 20. Yeah, it didn't, the 20, it just pierced it and ran away. Your next candle, gotta love these equal tops and bottoms. So here you have a downtrend that's intact. This is just a flush candle. It didn't change any trend. You don't see the 5 EMA kicking up through the T line. Stochastic RSI parameters that are working in the background didn't fire off, telling me this is a flush candle. You see these two equal tops. For me, that's an opportunity to re-enter the short if I got flushed out, or if I didn't get in earlier. And here you are, having this essentially as one big massive loop that turns out to be a failed breakout, and you're taking out the previous wave's low. The only question is the market going to look at this as the previous wave's low or this? So we'll see at the end of the day and into tomorrow.
Just a quick question, Block.
Of course.
Yeah, sorry. So the white line is the 5 EMA, yeah?
Mm-hmm.
And what's the yellow line again?
Is the 8 EMA.
8
so
EMA.
Yeah, so the T line, for those that aren't familiar, is simply the 8 EMA. Why it's coined the T line, it's a bit of a mystery, but I think it's trigger. Nevertheless, that's what it is, and I use the 5 EMA as a complement to it, and within our script, it's all like in our script, the T line and the 5 EMA, or whatever you want to put in there, actually, it's that flexible, is all there. But what we've done now is we've actually just changed a little bit so that we can get a little early cue with the 5 EMA changing colors to help us maybe take advantage of a slightly earlier entry if we feel confident enough. It's kind of an educated risk, right? Calculated risk. But that's all it is, 5 EMA, and it just turns colors from white to red, bullish to bearish type thing. And the T line.
And just again another question there. So it's been a while. Again, a couple of months. I know you told me this last time I was on class, but I haven't got my notebook with me. But 5 EMA, we're talking 5 days, right?
Correct.
And ETMA is 8 days worth of data.
Yep.
Yeah. Awesome. Sorry, continue.
Yeah. So and just so kind of everybody understands. So this is an example of where you get a nice buy signal. Right now, could you enter down here? Sure, but you can see it's a little choppy. But these signals are meant to try and give us safe entries, right? So 90% of the time they work really, really well. The odd time they bounce around a little bit, but that's usually a sign of consolidation anyways. But the point is that here's your entry, and then right away, Mike, I'm just going to blow this up a little bit. You can see what happens between the T line and the 5 EMA. You notice that separation starts to show, and that separation is momentum within the market, right? So
it's really going to bump the 200.
Yeah. So
where does the 200 is?
The 200 is red. The blue is the 50. The green is the 20. But you can see as the T line and the 5 EMA start to diverge and spread out, that's momentum, right? So here you can see the trend starting to build, and then you'll start to notice that this divergence between those two starts to expand, and then boom, right, the market lets go. the acceleration takes place.
Yep.
Okay? And you'll just notice that price rides right up the T line and the 5 EMA. This is a very clean example.
Yeah, so the 5
Right.
and the 8 was like support levels.
Yep. And on the way down, we often see the same thing. Let me just shorten the time frame up a bit.
So the one you were showing earlier, that was the daily time frame.
Correct. And
And
this
then you
is
went down to the 4 hour.
this is a 4-hour XRP, and I'm just showing you. There, you would have gotten your
Conversion.
confirmed signal, right?
Yeah.
But you can see that you did have an opportunity to maybe squeeze the entry a little bit earlier if you wanted, but nevertheless, that's your early entry on the 4-hour, or your entry on the 4-hour is actually an early entry on the daily. And you can see that, look at the divergence that took place, right? Even as price went sideways, the gap and divergence between the T line and the 5 EMA stayed intact, telling you that the trend down was intact, and then bump, 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 and then price fell off a cliff again, right? So it's just a matter of, like, the trend is your friend. Like everybody, you've heard that from the day that you started being interested in markets, right? But how do you know what the trend is, right? Like, how does a new trader or even an experienced trader quite simply look at the chart and go, yeah, that trend is X, right? Well, this is a really easy way to do that. And it's incomplete, and it's very, very, very accurate. There's your move up, beautiful move higher. What do we talk about? Points and flats can tell you changes in direction. Well, how about the points that formed in these two averages? Why do they form? Because they're shorter term, right? So they react quicker. So when you see the 5 like that point out, doesn't matter if it's an EMA or not, or a simple moving average, doesn't matter. When it points out like that, it's responding to drastic movements in price, right? Our indicator at that time also goes red on the following candle, so we're like, wow, that's a big sucking sound, right? You can hear the sell-off happening, and then you print this doji, right? Well, when we see these dojis at the top of bull runs, they often indicate changes in directions, and when you start to piece all these things together, well, now you're like the race car driver, right, in the cockpit before the race even starts, and you're just driving the race in your head. That's what you're feeling, right? This is an easy ride up. That's a real smooth straightaway, and here's a hard right. Okay. But the chart's telling you what to do. And when it doesn't make sense, well, then you have to just move your time frames around a little bit, shorter, longer, whatever you can make sense of. What's happening on this weekly chart? Well, you're getting support from the 20 MA on XRP. Is that relevant? Absolutely. Very. Do you want to come back and
the trend line is still in play?
It is on the exactly. So if you look on the daily, it looks invalidated, right?
Yeah.
So, but there's a reason why I leave it up. Because everything is fractal. We talk about this all the time, right? Everything is fractal. So although it's invalidated on the daily, is it on the weekly? No.
It's still validated.
It's kind of there's a relevance to it, let's just say.
Am I right in saying that the weekly and the daily is confirming that we're still in an uptrend?
Yeah.
Because we are reacting off the so we've got the 5 and the 8 EMA. It's, even though it's seeming like it's shifting, and is the green sorry, because I've got mine.
The green's the 20.
20 EMA.
Yep, and I don't want to get too far in the weeds, but the green's the 20, so you're getting some support.
Sorry, my internet's lagging a little bit.
We haven't printed a sell signal yet, but obviously we can see that we're rolling over and doing a little test. But if this was your own chart, you're going to look at this level that you already drew on the other time frame. You see this trend line here that you've let stay. And if you were to see price fall below this level, you'd be like, huh, I don't really like that. But that's why we leave these things here. So if you don't hold this 20, you're going to come back to the 50. And the 50 sits at roughly 233, 235. And right now what are we trading at? 281. And the 20 on the weekly is 270. So there's your range, right? Now if you bounce.
Sorry, give me one moment, Blunt. My Wi-Fi is lagging a little bit. Let me just quickly join my phone.
And if you bounce from here, well, then you're going to look out to take the previous wave's highs, and you start to look at the structure of these candles. What do you have to try and eat up on the way to get to those levels? The 10,000 thing at the end of the year, or even the $100 thing at the end of the year, is not realistic. It just isn't, and it's also irresponsible. So, what can I say?
Sorry, Blanc. Could you repeat that for me again?
No worries.
My Wi-Fi.
That's okay.
I'm on my phone,
That's okay.
but I've got the laptop. I'm
That's
trading
okay.
this.
We're moving on. That's okay. We're on to BNB now. We're going to look at
Okay, cool.
this daily chart for BNB, and it's also quite clean. You can see what's on the chart: the 20, the 50, and the 200, and our volume profile, and then our script, which is showing us the T line and the 5 EMA, and of course it's giving us our signals. And this is just a real nice example. When you have consolidation and all of your major, well, not all, but as many major moving averages as possible kind of come together and start to twist, at some point in time, when it does let go, it usually lets go like an elastic band. And really that's what's happened with BNB. The 200 being red here, you can see it was all resistance, the 50 and the 200 resistance, and then finally you get a bid. Green candles off the 50, gotta love it, off any major moving average, but I love the ones off the 50. And finally, you get that run off the 200, and this thing just opens right up. I don't think you're complaining if you bought at $600 or $620. And then all this momentum fans out all of your averages. Why is that important? Because in the midst of a parabolic move higher, the market's evil twin is preparing a retracement. And at some point in time, you'll come back and slowly check all of those levels again. So are you getting support off the 20 to keep it moving up, to keep it moving higher? And these are like moderate, healthy little retracements, yeah. But when you're trading above the 20 and the 50 and the 200, you have to look over your shoulder. And what everybody forgets when price moves higher is that it fans out all the levels that you have to check on the way back. And this is why people feel like the sky's falling on them. And the fact of the matter is all you're doing is coming back to the 20. You haven't even done that yet, but that's not the sky falling. Coming back to the 50 is not the sky falling. Coming back to the 200 on a daily chart is not the sky falling. Go to a weekly chart. We don't even get to see the 200 on it because there's not enough time here, but go to the weekly chart, come back to the 200 on the weekly, or come back to this level here, like, $500. That would be the skies falling. But not coming back to the 20 and the 50 and the 200. It's not. It's just because someone kept their foot on the gas for so long that it just expanded all of the ranges that you have to come back and check. That's it. Go to this weekly chart, and what would be the pullback range, right? We talk about using the T line and the 5 EMA as a guide, right? Well, there you go. perfect support weekly off the 50. Price bounces again. You come back to check, at least the T line, that's 9 and change. And the 20 is at 775. The 50, for those that are interested, is just under 700. That would be the downside risk. And the upside opportunity, well, it's just price exploration at this point. And when you see a weekly chart like this, and people start throwing numbers at you, you got to ask yourself, well, what are they basing this off of? And they're going to have some cockamamie scheme about how, well, if this amount of adoption equals this amount of usage and this amount of blah, blah, blah. You know what? Just shut up. There's no way to tell. There's really no way to tell. So that should tell you that that's risk. Right? It's not just opportunity, it's risk. And in order to get hit by something that you didn't see coming, you have to be looking at these longer time frames. Because you may or may not want to hang on to something that you bought at 1,000 all the way down to 500 or 600. All that lunch money that you saved up for 18 months. You might not want to just watch that evaporate. And that's why, whether you're a trader or an investor, that's why it's important to learn how to read price on a chart. Yeah. Do you want to buy off the 50 or another major moving average like you see here? Sure. Do you want to be buying these kind of tops? Yeah. Not me. Right? That's not where I'm going to take all my lunch money and dump it in at the top of something. And that's where all these markets are right now, in a sense. Many of them. So that's your downside risk, right? Back to the T line, fail that, back to the 20, fail that, back to the 50. Now this is a weekly chart, so that could take a long time. On the daily, 20, 50, there's your 200 at $700, 7 and 710. So all of that's possible. All of it's possible. This is something that we've watched for a little bit. Like this thing called Xano. Now, again, do you want to be buying up here? Or do you want to wait for the appropriate pullback? Because well, yeah, and like buying up here is when your buddy, when you go out for beer, is like, oh, you know what? Every time I buy something, price just crashes. I don't know anything about markets. Well, no, but you also haven't taken the time to learn either. So the only reason that you bought up here and feel bad about it is because you didn't know what you didn't know. And the hard part is waiting, right? Patience is key. The hard part is waiting as the trains left the station to feel like, oh, if I don't buy this candle, I'm in trouble, right? And all that kind of stuff. But before you know it, you have to realize that price comes back and checks the levels, just like we showed on the previous charts. So here's your daily chart. Like this is feeling like it's gotten away from you. And there's nothing that you can do, it's, if I don't buy now, I'll never get my chance. Well, here you are, trading above the 20, the 50, and the 200. This is a daily chart. And at some point in time, price was going to come back and readdress these levels. And that's exactly what happened. Right, there's your test, fail of the 20, come back, test the 50, fail of that. Didn't quite test the 200 yet, but I'm not convinced that we won't. These two candles, what have they done? Have they changed trend yet? Have they been bullish enough to pull that 5 EMA up through the T line? Not as of yet. So if you were to buy these candles, you have to buy them with the awareness that this is still an unvalidated move. and that there is the chance exists that this rolls over and fails, right? So, quite often, like if I'm trying to find a time frame, or maybe it'll be more clear. Not really any better, is it?
So with that one, with what I'm seeing, obviously we've had
Mm.
we've gone to the daily time frame. You can see it's rejected off well, not touched the 200 moving average,
Hmm.
but it's it's below the trend line. You know, the 5, the 8,
Yep.
the 20, the 50, but it's rejected off the 200. So you don't want to see a clear. Again, if I'm wrong, I'm wrong. But I don't want to see a clear rejection of the other moving averages, because at the moment the 200 is like you said that in most of your classes, like when it hits the 200 and it rejects off that, that's a good signal in a sense. But if it's trading below everything else, then we need to see a clear rejection of the 200 to sell.
So if I'm looking at this daily chart, okay,
Because I'm
and
seeing it above the 200, so
yeah,
I wouldn't want
no,
that to sell.
this is just,
I'd want to wait.
yeah, we have a handful of relatively simple and effective tools in our toolbox that we can use, right? And
Yeah.
you're going to find that over time, a handful will become very reliable, and then thus your favorites. So if we're looking at this daily chart, and this could be oil, it could be the 10-year, it could be a stock, it could be Bitcoin, it doesn't matter. You have a very clear end of this leg up, produces a sell signal. Shortly after, you can start to see that red form, which is telling you there's some selling going on, but there's your confirmation. This could have easily bounced and not produced a sell signal. So like you could have gone short early, not had a confirmation, and then hit the 20 and bounce, and then take out the previous wave's high, and then you got to wash your trade or get stopped out or whatever you're doing. Right? That's kind of why we wait, because we only see it after it's happened. So here you get your confirmation, you break the 20, and you'll also see that the divergence there opens up. So we know that we've broken one level with a confirmation of this sell signal. We see the divergence between the T line and the 5 EMA, and we understand how to interpret that. That is momentum down. You'll notice that price, when I say price, I'm referring to these candles, does not get above in any meaningful way the T line. Most often you'll find that, okay, the wicks test it or break through it, but close below the T line and or the 5 EMA. And just like I showed you here, how we use this as a tool to guide us, this is a filter. This is filtering out the noise and the bullshit that you don't need to listen to. You're listening to the market, right? Not anybody else. This is the market telling you what to do. The market said sell. Fine, okay, we did that. And we even had a chance to enter early, knowing that there's a chance that we would have to take profits early on that. But nevertheless, I'm saying you got your early signal, your confirmation. We know that when we break one level, we find the next. Knowing that, we can see the divergence stays intact. This move impulse down just goes sideways, wicks the 20 and runs away. The divergence stays intact, and price continues to trade below these levels. We're using it as a guide and a filter to tell us we are still in a downtrend. Now we've reached the 50, right? So we know that when we broke one level, we would find the next, or there's a strong probability of that. We found the 50. You literally wicked it to the penny. But look at the divergence. That divergence is telling you there's still more momentum. So the chances of bouncing are slim. Next candle, breaks it just like it did the 20, like it wasn't there, still trading below. And even now, we have these two green candles, is all they've done is narrowed the divergence, but they haven't broken trend. And that's what I'm trying to draw your attention to here. This could fail, roll over, and come back to the 200. Take out this wave's low, and then come back to the 200. And look at all the past price. You got to remember something. It's not just the 200 there. It's also the point of control. Like, remember on the Bitcoin chart, I told you it made me nervous that the point of control was so far much lower than where price is trading today, right? Because it's price is attracted to it. So if this fails, rolls over, maybe it hits the 50, which would be a first touch failure, and now you got the 20 arcing down on top of it. Maybe that's what hammers it and then pulls it down to the point of control and the 200 level. We'll see, right? But this is just how price moves in the event of this downtrend continuing. So we still are in a confirmed downtrend. Is all these are two green candles in a downtrend. That's it. Could this be your bottom of this wave down? I don't know, maybe. We're going to find out in a couple days. But you are still in a downtrend. The market is still telling you it's in a downtrend.
So with this with this one that we're looking at, I've switched it to the 4-hour time frame, and we're currently trading above the 200. Point of control is literally in the 200. So I'd wait to see if we react, if we respect the 200 moving average, if we reject the 200 moving average.
Well, a lot of
So would that be a
it's gonna depend on your time frame, right?
Yeah.
It's gonna depend on, you know, how long you like. Are you if you look at the 4-hour because you're trying to get a good entry on the daily, then I don't think you need to wait for the 200. Like, so for example, if I was trading this, I'm always looking for a time frame where I have price action off the 50. And this would be ideal if I'm looking at making a trade, ideally off the daily chart, and I'm trying to get a good entry, long or short. I would drop down to the 4-hour, and the fact that it's price action off the 50 is just a little bit of a bonus.
Because it's just like
but I got to see what it does here. We don't know yet whether or not this is going to act as further resistance or whether it breaks down and starts to print a sell signal, which, you know, there's still some more time to go here. The stochastic RSI is very overbought, and so is the Fisher. You know, the MACD is just breaking the zero line, but.
And then if you break it down further to the 1 hour, because I usually enter my trades in the 1 hour, so breaking it down to the 1 hour, because I'm using the free trading view account, you know, have all as many so for me, when I go down to the 1 hour, I only use the 3 smooth moving average, the volume profiler, and I can see the point of control is
so I think, it's at 11 and change. But I think the most important thing is, though, on this 4-hour of the same thing, you're failing the 200 here. You've come up and we talk about how it's not just the candlesticks that provide you with certain types of patterns. Your shorter term indicators can do the same. And just to give you an example, I'm just going to hide the candles. So this is your 5 EMA and this is your T line. This thin blue line is the upper value range on the volume profile on this 1 hour chart. So do you notice what happened? Notice how the 5 EMA just kind of double topped the upper value range, right here,
Oh, right. Oh,
right?
yeah, causing
So
that M.
yeah, it's not just it's not just the candles that will give you pattern looks, right? You can pick them up in other things, and I use I use the T line and the 5 EMA for things like this all the time. There's a reason when
Yeah,
I
'cause-
draw levels, they quite often connect these types of points from past and and current price. So what you have here is you've got a little bit of a double top that's formed at the upper value range, which is an acceptable level of support resistance, and so on and so forth. And then
Mhm.
you fail it, and you're failing it into so now you're just failing the 200 as well. Everything's fractal.
Mm.
Fail this, you start to get into these gappy areas. And where's the 50? Yeah, right down in probably in the midst of this shelf right in here. Price can move quickly
Yeah.
when it gets into these gaps. So I'm glad you brought up the 1 hour, because if you're looking at this 1 hour chart and you want to go long, you see that big gap
It's a
there
bad
and this sell signal that just got printed on the 1 hour,
idea.
and you're like, yeah, maybe I'll
Mm.
wait. Right, so which would mean that, are you going to fail the 50 on the 4 hour? Right, that's, you can see
Oh,
the relevance of the fractal analysis, right? So your 1 hour chart
yeah.
showed you failing the 200. Do you want to get consensus and confirmation now on your 4 hour that you're going to fail the 50? Yeah, like maybe it's a short. Like, who knows? You know what I mean? That's could be what it turns up here. Who knows? Let's look at the 12
So
hour.
the best thing to do would be to wait for it to react off the 200 on the
Mm-hmm.
4 hour.
Well, here's your 12 hour, just as an example. So we showed you the 1 hour where you're failing and getting a sell signal at the 200. Everything is fractal. We go to the 4 hour. It looks like you're trying to make up your mind at the 50 on the 4 hour. We go to the 12 hour, and here we are finding resistance on the 12 hour at the 20. And you can
Mm.
still see this volume profile here with the big gap. So, you know how we're talking about the failed breakout that, rolls over and takes out the previous wave's low? Is this the low? So, I don't go long here yet, is all I'm saying.
Yeah.
Not
Yeah,
quite.
I wouldn't be.
Yeah.
I was looking to go through on. Yeah. So basically, what I was trying to say was basically on the 1 hour, based off the limited instruments that I've got on mine, I'd be looking to go short. Um, because like when
So,
you took off in the
yeah.
1 hour on your chart,
Yeah.
when you took off um the bars, the candlesticks,
Mm-hmm.
and then it formed the murder pattern.
Mm-hmm.
So I'd be looking to probably put a I don't know if I'm using the right term for it, but basically I'd be looking to sell at uh 12.74, but I'll put like a stop loss. Is it not stop? A sell order. So my stop loss would be about so the way I'd look to do it. And again, I might be completely wrong,
I think.
but with a point of control on the volume profiler, it would be
So
so entry would be at 12 point.
yeah, I don't want to get in the weeds for the sake of time, but what I do want to show is that
Well, I'll be looking to basically short the short this
yeah.
currency. Yeah.
Yes, yes,
Oh,
and so what I do want to
because it's
demonstrate
giving me.
though is that these gaps, we talk about it all the time, is
Mm,
that they're huge opportunities for traders because price can move up and down through them with some velocity. So, and that's regardless of time frame. This just happens to be the 1 hour. If we go to the 4 hour, we'll see it equally
mm,
as clearly. But what this does is it provides opportunity, because for you as a trader, for anyone as a trader, price will move quickly through here. So if you're short to where? You're short down to a level of where
yeah.
price has been before, or in the mid or bottom of the gap, right? So
So,
whether it's long or short, just interpret those volume profile gaps as opportunity. I know that Rico Moneybags now, he just loves, and I don't blame him, he loves the volume profile because he understands that it's a money printer, right? When you know where that money has and has not been, you can move, you can trade in and out of those areas very effectively. Okay, so
So just
that's the.
very quickly,
Mhm.
um, with that trade that I was, when I said I was short,
Mhm.
um, so it's shorter on the 1 hour, but then when I switch it to daily, it goes, my profit target is exactly where the 200 moving average would be.
Mhm. Okay.
So, do you know what I mean? Like,
Yep.
where you say price like
Yeah.
visit.
Yep. And that helps you, any of you kind of validate your thinking, right? And
Yeah.
again, these
Again,
are.
because that's a point of control on the volume profiler. So,
Yeah.
could be
So
right, could be wrong, but
let's look at
yeah.
Solana. Solana on this
Mhm.
daily chart had a very nice organized run up, right? So another great example of price respecting levels, finding those levels because they're a draw for price. Again, this is the daily. Um, when you bounced here at the 200 and the 50, if you notice, you got nice clean retracements that found support at major moving averages, which is what you would hope happens. It's when they break those major moving averages that's you obviously have another type of market. And you can see here, and I know we talk about Solana all the time. As long as it continues to get support, it's a bullish chart, right? And it's a bullish chart until it isn't a bullish chart anymore. Like when price reverses and starts to retrace, or a bearish wave kicks in, it doesn't mean you're dumb if you're long, right? The market's going to do this anyways. It has nothing to do with you, what you think, or anything like that. It doesn't care. It's going to do what it's going to do. As long as it's in a bullish trend, well, that's good, I guess, if you're long. But does it last forever? No. So when it starts to break the levels that used to be support, then obviously you have a different market. And we talked about this all the time. Where will price go? Well, in the event of a breakdown, it will look for past price. Are you trading above the 20, the 50, and the 200? Yep. So we know that at some point in time, we're going to come back and is anyone going to tell me that comes in here regularly that seeing this big run up, that you were never going to test the 20 again? That it would just keep going up higher forever? No. No, nobody would
I
say
heard
that.
on I heard on YouTube and Twitter, Blunt, and TikTok that it was going to go to 1,000 directly.
Yeah, just not stop. Yeah, exactly. How you
Should
doing
I buy that?
How you doing, Eduardo?
All good, all good.
Good, good.
But yeah, you're right. No, 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 never.
Okay. So you guys know when you see price kind of balloon like that away from the 20, you just understand that it's for a limited time only, and it will come back and test it. And this is where you have to be married, not to the asset, but by what the market tells you. Right? Charts don't lie. This has nothing to do with what you like, don't like, own, don't own, believe in, don't believe in. Just follow the chart. Right? So here you go. You're coming back now and testing the 20. You're failing it. You're coming back and testing the 50, and you failed that. The divergence between the T line and the 5 EMA is actually pretty intense. So there's some momentum behind this selling. Here's your safe entry short. And up here, you can see that we were given a little bit of a clue. Our 5 EMA went red. We have a doji candle at the top of a bull leg. Little things like that. And I'm sure, look at our stochastic RSI and our Fisher. We're quite overbought. And here, there you go, your rollover. Right? This is, we're not trading the chop here. This is breakout and breakdown. So this is a nice breakdown. Where has price coming to? There's the upper value range on the volume profile. So that's always a on the way down, that would always be a level that we would look to. It's not super strong like the 50 MA or the 200 MA or anything like that, but it's a level that we look to because it's boxing in for us all that volume. And we know that current price is looking for past price. It's also looking for the point of control. That's where all of that volume has been, or the most condensed area of it. And today's candle is splitting it like it's not there, along with the 50 MA. And I'm going to throw the 100 on here simply because I'd like to know where it is. So I'd be inclined to say we're going to look for the 200, but before we get there, we might see some price action along here. And we've shown this before, right? Price rolls over, chatters along the 20, fails, chatters along the 50, fails. And before hitting here, there's always something in between. The 100 MA is right at this shelf, the bottom of this gap. So in the event of a breakdown, where does price go? It just continues to look for the next level until it finds a place that it can sit. So could we say it's 184? Sure, we could say it's 184. We could say it's 164. We could say it's 145. It, in the event of the breakdown continuing, those are the levels that would represent your downside risk. If all of a sudden you got a snapback candle and tons of money came in and changed trend on us, what are we looking for? Well, you're going to look for the 50. You're going to look for price to break the T-line in 5 EMA and trigger a buy signal. And then you're going to have to try and challenge the 20. It just rewind, play, rewind, play, rewind, play. Why do we do fractal analysis? This is why. What do you think this candle's looking for? Automatically, and I know we've talked about Solana in the past, and we've mentioned how tight the 20 and the 50 we're getting here. That's what price wants. It wants 180, 179, 180. That's what this wants for now, right? It's not a forever home when we talk about where we believe price is moving to. It's directional for the time being until we're given reason to change our opinion, because we're allowed to do that here. Because we're not married to, the chart changes. So your interpretation of what goes on has to change. You can't always be bullish and always be bearish. That's not realistic. But what we do have is a doji candle on this daily chart at the top of a bull leg. Points and flats, points and flats, points and flats. Here's the flat, or point rather, on the 5 EMA. With the doji that's got all of this air between it and anything relevant. That's what you'd be looking at the close of the week. You gonna buy that, or are you gonna short that? Because we're traders, right? We don't just buy and go long, or sell and go short. We have to make money at both ends of the chart, long and short. We have to monetize the chart. We can't sit on our hands for half the time. So if you were bullish for several months, that's a sell candle. That's a get out of dodge candle. And this is looking for that. Now, does that feel unreasonable? Probably. Did I say that was 180? Let's look at it on the daily chart. What is 180? Here's 184. So it's the 100 MA. Right? So the 20 and the 50 on the weekly, which it would be unreasonable to think that it wouldn't get touched in any way, shape, or form, is roughly the 100 MA on the daily at 185, 184, something like that. Now, does that sound nuts? Not today, because, we're not all that far away from it. But it sounded nuts up here. And I know we talked about this. So here we are in real time, coming pretty close to that. And that just you know, it's another example of what we say here sometimes might sound batshit crazy. Remember some of the levels that we've drawn on our charts that we leave here. We do it for a reason. Do you think that 3752 level, this horizontal level here, nobody thought we were ever going to come back and see that again as price was going higher. Well, guess what, folks? We're not all that far away, are we? Why? Well, because we know that current price revisits past. We know when we use our volume profile that all of this up here is fairy dust and air. There's not a lot of volume up there to hold price up because of the parabolic movement higher. We know that price is drawn to levels that represent where it's been before. In this case, volume, there's the point of control. Upper value range. So nobody wants to hear $2,800 when it's $4,200 or $4,400 or $4,500. Nobody wants to hear that. And they'll think you're nuts. Believe me, I know. They only think you're nuts, though, until you show them that you're not. If this rolls over, at some point in time, you're going to find the upper value range on this volume profile. Now it's a dynamic range. It does change with daily trading. And if you sometimes see it on your lower time frames, you might even see it move, right? But were we trading above the 20, the 50, and the 200? And that purple is the 100 in this case? Yeah, you were trading above all your major moving averages. So looking over your shoulder, you know at some point in time, you're going to come back and address those levels again, right? So you broke the 20, in this case, and the 50, again at the same time. There's a message in that. And the message is there's momentum behind this sell-off. And why will it feel intense? Well, first off, what happens when you get into a volume gap? Price can move through really quick. What happened? Price moved through really quick. Why? Because there's nothing there from the past to hold it up. It's fairy dust and air. No support. So just as fast as it went up, it will come down even quicker. Where will it find some support? Well, probably at this 3750 level that we've drawn before, which just so happens to be lining up with the 100 MA. But that's a very, very, very skinny shelf in negligible trading. So what does that mean? Well, that means that this gap that we see here might get treated like this gap got treated up here if you don't hold. Notice how we expect first touches to get support. The probability of that is much higher. Did that happen? No, it didn't. The message? Yeah. I think we're done. For now. That's sell, right? Sell, sell, sell. No support. Where you think you're going to get it, that's a problem. Divergence opens up. You're looking for the next level down. We've identified this bench of past price already. Chances are by the time we come back next week, we're going to find it. And that would be Tuesday. If we don't hold it, what happens? So if we break this level, we find the next level. The fact that the next level is the 200, that's sitting beneath the upper value range and beneath the volume profile tells me that that's a likely place for price to go. In other words, this sell-off could be extreme. It's not going to be one big giant candle on the way down. It's a process. But we know what the areas are that will get tagged or likely to be tagged. And those are also areas that we will be aware that they could turn into buying ops, right? That's so you're all over this, up and down. Here's the weekly chart of ETH. A little concerning because where's the 200? 34.59. What was 34.59 on the daily? This area? Oop. Yeah, right up in here. Interesting. So that still puts us in a gap that makes me feel even more confident that we reached that lower level. And here's the 50 at 3,000. I don't know. This is not a it's not a bullish looking chart all of a sudden, is it? So you can see downside risk, a 20 weekly or the 100 daily for your first touch. Sorry, but that's what it looks like. Let's look at this thing that I know our friend Rico Moneybags has introduced us to. Now I know why they call him Moneybags, because he's trading this. So here's an example again where this is the daily chart. And look at the relevance of the 50-day moving average on the daily. So attempt, fail, attempt, fail, attempt, fail. At this point, you know on the daily that this is either going to be a big break of the 50 or a massive failure. One of the things that we try and remember is that we don't want to long into resistance without total confirmation. And this is why, right? Bang, bang, bang. Wait till what you're trying to break through is no longer resistance, especially on a longer term chart. Right, so failure of the 50 here is what you need to note. You can see how helpful it was when it needed it as support, but when you broke it, you know, this is just rejection, failure, rejection, failure. You break the 50, you found the 20. You can see it played around here for a couple days, but eventually it broke that too. What did it find? It's found and broken the 100. This level here I have for other reasons. And what's it looking for? I think the 200. And if we look on the shorter time frames, you know, when everything comes together like this and you break it, you know, all of this is now future resistance. But if you look here, you see how the divergence in the T line and the 5 EMA has held, right? That's telling you that all of this was still a real trend, even as it went sideways here. That divergence is, this is why you got to trust your charts. We're good, we're good, we're good, we're good, we're good, we're good, we're good. These are just green candles in uptrends, or downtrends rather. Right? That's all they are. Price is trading on the south side of the T line and the 5 EMA. We're being guided, some additional cues in here on it changing color and things like that. But we're filtering out all the BS nonsense. The only thing we need to know is, if we're short, are we still good to be short? That's all. That's it. Real clean. And if we wanted to get even a little more forensic, let's line up. If we, it actually does a little bit. Wow. Okay. So I'm just lining up support, resistance, just so that we can see if price comes back there. It's been there before, right? Buyers and sellers have shaken hands in the past. And this is why in crypto, to be quite honest, I'll set levels like this. And if I have, let's say I'm short and I have a trade open, do I leave an open order for something that looks like it never will never get hit in a million years, because then something like this happens? Right, these candles in here? Yeah, because this market's volatile enough to allow that to happen. But let's just see. There's another example of where we're identifying levels. It might be relevant, it might not. But, you know, good for Rico, because he seems to be finding these little gems. And even on the 12-hour, right, doji candle, fades out to red. You have your 5 EMA crossing down through the T line, and then here you get your signal confirmed, and then all that happens is that you test these levels and fail. You know, big impulse down, and we go sideways. We talk about this all the time. This is a great example. Impulse down, could be an impulse up too, but in this case down, and you go sideways. That sideways action, to me, I interpret as bearish. If this was going to be a snapback up, you're going to get candles that will challenge these levels and most likely break them and essentially eat that candle up. But these impulse downs that go sideways back to the T line or the 5 EMA, allowing this divergence to stay intact, is just a rest usually, and then the downtrend continues, which it has here. So we'll see where this goes. But, you know, that was a good one for to Rico to point out for the group, because I think it's been meaningful. Look at Bitcoin all of a sudden, down 3,100. What do you think it's looking for? Right? And we can say this, you know, being constructive. All right, probably looking for at least the upper value range, because we've been trading in a premium up here for a while. So it makes sense that we come back to that level. Been there before, been here before. Little gap in here, which if we slip into that, we know what happens. You know, I'm not trying to be mean. I'm just saying, hey, that's what's going on. And having more information and an understanding of where price is going is typically more helpful than not helpful. You know, this is oil. Let's look at the weekly, because the weekly is going to take out a lot of noise. You know, that daily chatter that we get sometimes. But what's happening? These have just been tests and fails. You know, at some point the price will rebound, but it's going to take time. And you can't will price higher. You know, for as much as you want to, it's pretty tough. Like if you tell me that I have to, oil's going to be $80 a barrel, because it would probably have to get up there before you take it seriously, at least 75 to 80. That seems outrageous right now. We'll see. I guess it seemed outrageous when it went to its lows as well, but this is something that's not going to change overnight. But the chart will tell us when it does. Who else do we want to look at here? Link. Where is it? There we go. This is Link. Not too long ago, it didn't matter who you spoke to. This thing was going to take off, never to see a retrace again. And the reality is that you have to let the market come to you. If you're the one that goes to the market, chances are you're going to overpay each and every time. Let the market come to you. Where do we think price wants to go here? Well, we failed at 20. This big parabolic move up as we were on the way up is never going to last. So if you're just patient and you let the market come to you, eventually you'll get what you want, which is a better price. But the only way you're going to get that is if you understand how to interpret price on a chart. Here's our weekly. 16, 17 bucks is the 20 and the 50. It doesn't sound or doesn't look unreasonable now. And if you don't hold those levels, well then, what are you looking for? You're looking for benches of past price and so on and so forth. Patience is key. You don't want to buy at highs because you don't have to. You just don't. But for some reason, people can't stay off the buy button. Give yourself a break. Like, you can't always be hammering it. You have to wait to let the market come to you. We talk about in here how to identify a bottom, right, or buying opportunities and short opportunities. Handful of simple things, right? Handful of simple things. That's all we need to do.
I think the reason most people can't do is because fear of missing out.
Oh,
For example, like
yeah.
I saw, you remember like at the beginning of the call before everybody joined in,
Mm-hmm.
I was talking about how I've missed out on gold. And looking at gold, it's hitting all-time highs. And with what uh is it, no, JP Morgan predicted it to be about 15,000 an ounce. And I've seen how much I've missed in that climb. I could be silly and looking to enter it right now, which is an all-time high, but it could be a
It's
mad pullback.
well,
So I
it's
think a lot of it is psychological, isn't it?
sure, much of it is psychological, and it's
Yeah.
it's when we get into the psychological game that we typically have problems, right? Like,
Yeah.
I'm interested, as I'm sure many of you are, about the economy and what makes it tick and what happens when, and well, what if we did this? What kind, the cause and effect, and all of that is interesting, and it's important to have an understanding of it. But ultimately, as a technician, I have to follow the chart. Like, I have a general understanding of the lay of the land, what might be going on in the economy, but ultimately it's the chart that guides. Right? Charts don't lie. It's a real-time representation of what money is doing, not what people are saying. And there's a lot of people that have a microphone and a soapbox, or the people or the media is very happy to give them an outlet. And these people will talk and talk and talk and talk and talk about their point of view to the point where you don't have one of your own anymore. And because there's not an understanding of how to read price on a chart, you become so reliant on that nonsense. Like I've told you before, I don't give a rat's ass what any of these people say. Whether they be analysts, whether they be economists, I appreciate what they're doing. I respect the learning that goes into it. I totally get it. But at the end of the day, the chart is going to tell me. The chart is going to tell us. Like, we're looking at the Russell right now, RTY. This is a daily chart. Handful of things on the chart tell us a big story. 20, 50, 200 are on there. Okay, fine. We have a volume profile. And then our T-line and 5 EMA. We know that, as long as we're trading above these levels and getting support from them, that we're, in this case, in a bullish pattern. You've come back and you've stayed relatively close to the 20. Every time you got a little bit far away from it, you retraced and tagged it, and the move carried on. When you did break it, as you can see in the middle of the screen, you got support from the 50 and the 200 actually, and then the bounce continued. But this doesn't carry on forever, right? And my concern is there's so many people that are accustomed to seeing price go up that when it actually does retrace in a meaningful way, they won't understand what's going on, right? Like they may be half broken or halfway fallen to the ground before they realize they need a parachute. Never mind, pull the cord. That's just a general comment, but you can only trade what's in front of you, and regardless of what you think. So am I concerned that this is getting to be a runaway freight train and we might have some hiccups along the way? Absolutely. But right now you have to trade what's in front of you, right? That's a bullish chart. Now here we are today. We just happen to be coming back and retesting the 20. But we've seen before that, just because you retest the 20 or any particular level of relevance, it doesn't mean the sky's falling. It's just an appropriate retest, or come back and check an appropriate level and either move on or regroup. So we have to determine now whether or not this turns out to be, a tag, and then you move on and take out the previous wave's highs like you did on the way up here, and that continues, or do you break the 20 this time and look for the 50? And if you come back to the 50, it's not a first touch. So there is the risk that you don't pause around it at all. Right? The fact that it's sitting here right at the upper value range, it's actually, and it's above the volume profile and all that stuff. So to come back and tag those levels wouldn't frighten me. Right? What it would frighten you is when you break the 200, because the 200 is your most basic bull bear indicator that you have. So you break the 200 daily, you're trading below it, you're bearish, above it, you're bullish. That would be kind of an oh shit level. But
That's not necessarily a bad thing.
Yeah, and here's the 20, at 22.40 on the weekly. What's 22.40? So this is roughly 22.40 in here, which means if you were to pull, if price was to start to fade, it would bring the 200 up a little bit, and maybe they do meet in that neighborhood. But that's not a drastic retracement, right? It just isn't. So the problem is that because you go parabolic, you just fan out all these areas, and when you do retrace them, it just feels catastrophic, and that's part of the problem that people have. But it's, right now it's a bullish chart, but if it fails the 20 and you start to look for the 50, if it fails the 50, well, we've kind of explained how that works. Okay. If we look at the dollar real quick. Yep.
Yeah, I was going to ask, can we look at oil? Because, last time I was on call, we were actually looking at oil. And you called it correctly, by the way, which, by the way, if life wasn't so crazy, I would have been on oil like crazy. But last time I was on call, you called that it was going to go to $61 per barrel, wasn't it?
Yeah,
something like that.
That's
and you hit that level as well.
Yeah, so just for reference, that's the number that I've had since up here, and in the we talk about in the event of a breakdown, where could price go? Now, there's nothing on this chart other than our candles and then these few trend lines and stuff like that. But that was the same kind of thing. If this was the top, which I believed it was, and price was to break down, what were the levels that you should look for? And it's always been 61.66, and one of the reasons is this. To the left of this chart here, this is just an area of past price, along with a few other things, and that was an area that I always believed we would come back and test. If the breakdown was to continue and not catch a bid, which it seemed to do, and it obviously found that level. And this is a real level because it's been there 1, 2, 3, like countless times now. Right? So if your weekly chart, this is your weekly, what are you trying to do? Well, you can see where your resistance has been and will still be. And this is why you have to break through, until you're trading above $75 consistently, I can't take it seriously. It's just not there yet. It's just not there yet. There are too many long term, if you believe in that kind of stuff like I do, um, long term averages that are problematic for price right now. So this is a weekly chart. That's 1,000 days on a weekly chart. That's 500 MA on the weekly chart. That's a lot to break through, right? So you can see how relevant these levels have been as support and resistance in the past, and they still are. So there's, I'm just not there yet on it. So I actually have a more negative opinion than I do bullish. So I think there's still more downside.
Well, you were right in the sense of like you did call it that it was going to go to that price level. Again,
Well,
using the 1,000 moving average,
yeah.
that price was going to come back to that.
I just,
Like you always say, price likes to retest the moving averages.
yeah, I don't want to say that I called it. I just simply think that, where there's an understanding and that this is a language. Yeah, and that, if you understand that this is a language, well, we're being told and talked to, and it's just up to us to interpret the language effectively, and that's all this is. Math is a language. This is based on mathematics in a sense, so you have to appreciate that it's a language as well. And you can see these markets are breaking down even more. Right? Wow. Okay. So I know that I just want to look at this one more time because I get asked.
What's that?
So this is what Rico introduced us to, CFX, and this is a real good example of the trusting your chart thing. Just before we kind of wind up, because there was your sell signal, and yeah, we kind of had a nice organized pullback, and then all of a sudden it just fell off a cliff. And this is where a lot of people will kind of close their trades up in here and say, okay, I'm done with this thing, and then they don't look at it again. But as long as you've got, like, when you take profits, that's up to you. But just understand that as long as you see that divergence open, you're still in a downtrend, and that there probably is another leg coming. And I think that's what we're seeing now. And when you start to look at the longer time frames just a little bit, you can see what price is looking for. So
Is that crypto?
it's a crypto, yeah. So I'm just giving a shout out to Rico for bringing this to the group's attention, because I know a bunch of people are trading it pretty well. Because it's just, again, it's, the chart's not lying, right? Impulse down on the daily, sideways, and then capitulation again. And a lot
And
of
if you're
people,
putting the 200 average, it looks like it's heading towards the 200 moving average on
yeah,
the
for
daily
sure.
time frame.
Yeah, for sure.
So that's looking like a really good, like a
Yeah.
previous point of
Yep. But
uh,
this
uh,
this is why, Mike, we say to people, this is not all that hard, right? Like, there's a handful of things that we look for and that we can teach quite easily. Here's the 50-day moving average on this. Once again, you can see the resistance. The failure setup is there. This is letting the market come to you, right? We don't want to trade this chop. We want to make sure that we're making the right choice. Here we break the 50. We're testing the 50. We finally get a sell signal telling us that, hey, we're going to fail. And price just rolls over, right? And when, and look, I know there are some people that will say, man, you take a lot of risk. Like, you allow things to hang for a long time. No, I don't think I do, right? When I look at this chart, and I see that sell signal and this divergence is intact, I'm okay playing around in here, because I know there's more to come. Now, you can take some off, of course, but I'm just saying that this is how you let the runners run, right? This is telling you the runner's still running. 4-hour chart, the runner's still running. Everybody wakes up in the morning, oh, I wish I could cook a runner today. And then you get a great entry, and then in 3 candles you close the trade. And you're like, damn, I don't get any runners. Well, that's because you're not paying attention, dude. Right? The market's telling you this is a runner. Right? Just calm down, relax, breathe. Let the chart
This one
guide
had
you, right?
Yeah, because what a great point of on the volume profile on the daily.
Mm-hmm.
You had a great entry point at 0.19154, and then you had also had a great entry point on the 4 hour time frame. And then if you even if you like narrow it down to the 1 hour, you've got multiple great entry points on this one.
Well,
Wow, I see why you call it money bags. So good
absolutely.
God.
Yeah. So, and this is the other thing is, guys, is that if you're afraid, I'm just going to expand this up and I'm going to take these averages off because it's going to clutter
Oh
this
my
up.
God, this is such a great one. It's
So, yeah.
beautifully done.
So when you
Apologies, I'm gonna.
think, a lot of people think, well, damn it, I missed the move. I missed the move down. Now there's nothing I can do about it. Right? So this here, these three candles that can't break the T line, look for an opportunity to re-enter your short,
Three soldiers.
right? And then the trend down continues. As long as this divergence is intact, it makes and understanding what it's telling you, it makes these decisions about how to handle. So how many people do you know that would have tried to long the 4th candle? A ton,
Too many
right?
people.
Yeah, they'd probably long the 2nd, 3rd, or 4th candle. And then all of a sudden this shows up and they're like, damn it, every time I do that, I get kicked in the teeth. Well, that's just because you weren't paying attention to a few simple things. That's all. It's easy to fix. Right? The trend down
Because I
continues.
agree.
It's just an opportunity to re-enter the short. These 3 candles could have easily been one big giant one, right? We see that all the time. You get one big giant candle that comes up but doesn't break the T line and still leaves the divergence, and then it creates the next candle, creates an equal top, and then boom, it falls down again. There you go. As long as that divergence is there, it makes these other decisions that much easier.
See, whenever I see those three little ones, whether they be bullish or bearish,
Mm-hmm.
call them the three soldiers. But that's my own terminology.
Mm-hmm.
So the three soldiers up, and then you've got that engulfing candle down, taking out the three soldiers. That's like pretty much like a clear signal to wait, but then sort of like the next move.
Mm-hmm.
But then you look for an entry or where price close. So once that engulfing candle closes, that's a good level to set a sell order, and
Yeah.
vice versa.
Yeah. So I guess the takeaway today is that there's a handful of things that we do. They're very repetitive, but we get to learn them and understand them incredibly well. And those handful of things make this a very profitable, easy to execute way to manage your charts. Understanding price on a chart is key. We've tried to make it as easy as possible. We've taken 25 years of frustration at times and put it into a handful of things that make sense and work, which this kind of scripting is born out of. Combine that with a few simple tools like a volume profile and some moving averages and some momentum indicators, and you're off to the races. So this is it's not hard to learn, and before you know it, you can be trading with some effectiveness. Right? Manage your risk, use your stops, don't get greedy, set targets of where you're going to enter and exit or take profits before you walk away from your desk, and again, don't get greedy. You're going to be better off taking profits at 20, 30, 40% than trying to wait for the ones that are several hundred. Right? Remember that. Okay, guys, so we will see you on Tuesday. We'll see how this market reacts over the next 3 or 4 days. At the way it's behaving today, I think we're going to have a fun session on Tuesday. So Don't hesitate to reach out with any questions. You know, I'm always around. You can get me on Telegram if you'd like to join our group. There's an invitation on our X page and also, I believe, on our YouTube page. So don't hesitate to connect with us. And I will see you guys on Tuesday of next week. So take care, everybody, and happy trading. Cheers.
Thank you, Blunt.